All right, welcome back, everyone, and thanks for tuning in. My name is Tyler Johnson, and I am the owner of Stillwater Financial Advisors here in Charlotte, North Carolina. We made it. It is the last weekday of 2023, and I want to wish you a very happy new year, though most of you are probably going to be watching this in 2024. Given that we are getting ready to enter into a new year, I thought that it may be helpful to spend a little bit of time sharing some insights on the markets and the economy for the year ahead. Before we start with that forward looking perspective, let's just take a few minutes and go and look backwards to 2023. It's certainly been an interesting year. The first half felt more like 2022, where the Fed was continuing to increase interest rates, and that resulted in pressure on both the stock and the bond market. As we got over the midway point for the year, we saw the Fed begin to ease back on their interest rate increases after inflation pressures began to subside. And in the fourth quarter of this year, we finally saw a shift in Fed policy to hold interest rates steady. And now, most recently, they're projecting 3 rate cuts for next year, 2024. This long awaited indicator for a reversal in interest rate increases, along with subsiding overall inflation, finally gave investors something to cheer about. Bonds stabilized and recovered some lost ground, and stocks as a category saw a nice boost in the third and fourth quarter as well. So, with that backdrop, what should we be thinking about, looking for, expecting into the new year? Well, let me first say that I still firmly believe that no one has a crystal ball and that you should be skeptical of anyone who portrays that they know what will happen in any given year. They don't. They are just making their best educated guess, and some of those educated guesses will end up being right, but plenty of them will end up being wrong. The market is just way too complex and often irrational to be completely figured out. Election years do tend to be positive years for the markets, but what happens with the approaching primaries could have an effect on that trend as we wait to see if we're going to end up with Trump versus Biden round two, which the market may not see as optimistically or favorably if it's a repeat of what we saw in 2020. Overall, both the stock and bond markets look healthy after coming off of an 18-month down cycle. The major suppressant for bonds historically is rising interest rates, and falling interest rates tends to be a positive boost for bond prices and bond returns. So, with rates scheduled to fall into next year, I'm expecting the bond market to stabilize in 2024 and serve in its traditional role as more of an equity diversifier with returns that exceed cash over a more intermediate time window. When rates fall, bond prices rise and yields on the cash will simultaneously decline. And that is what we are expecting to create a more normal environment of returns for cash, bonds, and stocks. The environment we saw in 2022, where bonds and stocks both fall significantly at basically the same time, is pretty rare, historically every 30 to 50 years, and should not be expected to repeat again anytime soon. Equities are much more unpredictable. However, the navigation of policymakers thus far seems to have kept us away from any significant recession, while also pushing inflation to subside closer to the 2% target that they set. I don't necessarily think a 2% target is the right landing spot, with historical inflation ranging closer to 3%, but I am encouraged that the Fed is backing off of rate increases even before reaching that stated objective that they had. The current run up in stocks over the last 3 months could be a little ahead of schedule, as we may be seeing some FOMO and some irrational optimism. Don't be surprised if there is a little lull for equities sometime in the first quarter of 2024. I would encourage you, though, not to let that discourage your long-term investing, as all signs are still pointing towards us entering into another growth and recovery cycle in the months ahead. And maybe years ahead as well, hopefully. Holistically, the economy seems quite healthy and in the right spot overall for a positive season after nearly 18 months of that post COVID lull that we all experienced. I stand firmly by the mantra that time in the market is more helpful than timing the market, and investors who build a portfolio properly aligned to their risk tolerance and their time horizon should have plenty of reasons to be optimistic. Valuations in both the international equity space and the mid-small US space seem to be more appealing right now, but we have also seen prolonged periods where out of balance valuations persist. This includes a strong US outperformance over the last 10 plus years due to a very strong US dollar. The pendulum does tend to reverse course eventually, so I believe it's as good a time as any to stay fully diversified across your different equity exposures. With all of that, that's a lot to take in. So if you're looking for someone to help you understand investments and build a customized strategy aligned to your goals, timeline, and risk tolerance, I'd love to be a part of your journey. Not all financial support is created equal, and we would love to help you figure out your options and what solution may be the best fit for your needs. You can engage with us at stillwaterfa.com. You can also reach us on social media or simply call us at 704-248-5553. Don't forget to also hit the subscribe button below, and that'll keep you informed about any new videos and relevant content into the new year. But for now, want to wish you a blessed and healthy new year, both personally and financially, and looking forward to engaging with you further in the days ahead.